Polynomial support and resistance. Have you ever had a hard time drawing in support and resistance just to find out that it was wrong? Price breaks through or breaks above, and all the time you're scratching your head. What happened? In this video, we're going to go in depth from beginner all the way to advanced technical analysis. Some basic thoughts on support and resistance all the way to how to trade it successfully. Obviously, you're going to hear some things that you've already heard before, but I guarantee you'll hear things that you've never heard before to help you be a better trader. And if you want more, follow for more. Now for the opening act. Support trend lines. Support trend lines are just that. They give the support to the candlesticks. As they come down, they bounce off the support line and go up. Uptrend support is when price and the trend line are going upward, giving support to the bottom of the candlesticks. Once it breaks that trend line, the uptrend support is over. Sideways support, when a horizontal line is made underneath the candlesticks, giving it support for price to bounce off. Downtrend support is when the trend line is in a downward angle and price bounces off of it going up, but then continuing lower. And the polynomial works the same way. When the polynomial is trending up, it shows you support areas to enter into the trade. When the polynomial trend is down, it will show you support areas to exit the trade. Even if the charts are going sideways, it will show you the horizontal trend line. So no matter what chart you're on, the polynomial always shows you support. Now for the resistance trend lines. Resistance trend lines are always above your candlesticks. They'll be here, price will come up, and they'll be above, showing you where the resistance is. With uptrend resistance, you'll have a diagonal line going upward. Price will hit up against the top of that resistance, as the example shows. Sideways resistance will have a horizontal line where price goes up, but then falls back down. Downtrend resistance will have a diagonal line down, where price comes up, but keeps going lower. The polynomial also shows you downward resistance, where price will come up, but then continue lower. The polynomial will also show you the horizontal or sideways resistance. This is common with a double top. The polynomial also shows you the uptrending resistance. Resistance is also key if you're going to take profits. Now I know what you're asking. Well, how do you find the support levels? I'm glad you asked. Support lows. Did you know that support always lands on a low? Let me show you. Well, in order to have an uptrend, you have to have higher lows. In order for you to have a downtrend, you have to have lower lows. And so your support should always be at the lows. Notice how big the moves are from the support lows on an uptrend versus the support lows on a downtrend. Based on the example, we have a low, a higher low, a higher low, another higher low, another higher low, and now an equal low. And the polynomial shows you this support. It also shows you the support on equal lows, which is great for taking trades long. But remember what the example showed us. Not all support is equal. Because this is a downtrend, the counter trend trade was not very much in size before price kept going lower. So when we have a downtrend, don't take these trades. So that's support always at the lows of the candlesticks. Now let's look at resistance at the highs. Resistance highs. Your resistance lines will always come in at the highs of the candlesticks. When you're in an uptrend, you'll have higher highs. And when you're in a downtrend, you'll have lower highs. And that's why I say the highs will always have resistance, no matter if it's in an uptrend or downtrend. In an uptrending stock, your highs will come into the resistance of the polynomial channel. On a stock going sideways, your equal highs here will be at the resistance side of the polynomial channel. On a downtrending channel, your lower highs will always be up against the polynomial resistance. Great place to enter or trade lower. Now that we've talked about support and resistance, let's put them together. Polynomial support and resistance. The polynomial channel has 4 different patterns. First is the uptrend, the lower band being the polynomial support, showing you where to enter into the trade long because of the uptrending stock. Next is the resistance side of the band, showing you great places to take profit. Next is the rotation from an uptrend to a sideways trend to a downtrend, showing you support and resistance. Next will be a completely downtrending channel, showing you all the resistance levels to short and all the places to take your profits. Next is when the downtrend is over, price starts bottoming out, going sideways, showing you areas of resistance and support to take the trade long. So no matter what picture you want to see, the polynomial will give it to you. Now that we've seen 4 different looks at the polynomial and the channel and what happens with the trend and how it turns, goes from trend continuation, uptrend, to trend reversal, from uptrend to downtrend, then downtrend continuation into reversal, downtrend to uptrend reversal. I know it seems like a lot, but let's break it down because really there's only 3 ways to trade that. The first is trend continuation. When the trend is up, you buy at support in anticipation that price will continue higher. The same is true for a downtrend. You identify the resistance areas, create a short entry, enter into the trade lower. Now the next one, I recommend against it if you can, because you're not going to make as much money. And there's so many opportunities out there. Why do something that's going to make you less money? So let's look at the counter trend trade. In this example, we can see that we have an uptrend, came into resistance. So if you take a trade here lower, it's a counter trend trade. But you can see for the most part, it just went sideways, not really yielding you any money. But if you say, oh, look at here, how much it fell off over a longer period of time, and you notice this polynomial support giving you a signal for counter trend trade. And based off these results, you think it might happen again. So you get into the trade and quickly you start losing money because the trade goes down. Then you get a little relief and the trade sells off again. Bullish or bearish counter trend trades, you never really know what's going to happen with them. If they're going to go all the way back up to resistance or just a little and fall back off. Now for trend reversals. Trend reversals are when you have an uptrend and then price goes into a sideways channel. The key that you notice is you have a double top at resistance, telling you that the momentum of that uptrend is going down. The great thing about the polynomial is it will already start to show you the direction curving downward. After you identify the first resistance and then the second one, making the double top, this is a trend reversal where price should go lower. You can do other technical analysis now that you know support and resistance, identifying the price breakdown of this support level. Or after the double top, look for the first, that's right, lower high. Here we have a bear trend reversal coming down, starts going sideways with the polynomial, shows us a low for support, comes up into the resistance, but remember to go long in a trade, you have to be at support. In this case, having a double bottom, meaning be patient, let price come down a little bit lower before getting in. Comment down below, tell me what you like to trade the best. Now, have you ever heard of the saying supply and demand when it comes to support and resistance? When a stock is uptrending, that tells me that the demand is high. When price is up against resistance, that tells me the demand is too high for me to buy. I have to wait for demand to come down so I can get a better price. Then demand goes up again and I can sell it. This stock is in high demand. Actually, the highest of demand being up against resistance. But I know when demand's going to be low because I have a support channel lower showing me. When I see demand softening as the channel goes lower, it lets me know not to get in this trade long when it comes back down to support. Because what happens after that, demand changes. I don't want to enter a short trade here. The demand is too heavy, nor at any of these places of support. But when price comes up against the resistance, it lets me know that demand is low. I can get a better price because the demand will become great again. And that's why I like the polynomial, because it gives me a center point towards my target, letting me know that price is going to be oversold. And when price is over my midpoint, I know that it's overbought, ready to go lower. Uptrend, underneath the band, lets me know demand is low. For a high demand stock, perfect place to enter and trade. Demand is low. For a hot stock, ready to get into a trade. That's why I like using the polynomial support and resistance channel. It makes quick work of your trading. Being able to identify where to enter, where to exit, that's a game changer.